So, special board meeting of the Palmdale Aerospace Academy. They get roll call,
David Lujan,
present.
Patrick Brophy, Alec Bagaisic, Nardi Lopez. Here. Janet Simons. Here. Dennis Trujillo.
Present.
Justin Knowles.
Yep, Mr. Riley, can you please lead us in the pledge of allegiance?
Right hand over your heart, ready to begin.
I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Any public comments concerning our agenda items? None? Legislative session. The motion before us is the review and consider approval of the annual audit report for 2023-2024.
I think I'll have some verbiage real quick. Right, so in front of you, you should have the audit. We apologize to you that you received it so late. So what I'm going to do is I'm just going to go through page by page since you probably haven't had time to read the whole thing. And give you a little explanation on each of it. If I get too much into the weeds, just let me know, or if you need more information, just let me know and I'll do my best to provide it, okay? So sorry. On the table of contents, obviously the first page, I always like to point out that the financial section is really what is required for the audit. And the information, the supplementary information is really just additional information for us to look at for analytics. So the first part of the financial section will start out with the independent auditor's report. And so basically what the independent auditor report is, it's the report that is basically saying what they think about the whole audit. So in the opinions section, under the first section, second paragraph, it says, in our opinion, the financial statements referred to above present fairly. And that is really important. That's what we want to see in any audit, because that means we're accurate financial statements. Even if we have findings, there's still, it's a good audit. So I always like to start with that. The next section, when you read through here, and they talk about the basis for their opinion, really all they're saying here is they use auditing standards for generally accepted auditing standards. And we provided them audit evidence is sufficient and appropriate to provide a basis for the audit. So we gave them what they needed. Responsibilities of management, just as a reminder, the auditors come in, ultimately we're being audited, and it's really our numbers, our financial statements, and really they're only coming into audit to make sure all of our numbers and everything we did is accurate based on compliance. And then when we get to the audit responsibilities, they're just saying that our financials are free of material misstatements. Their objective is to obtain reasonable assurance that the financial statements are free from material misstatements due to fraud, so on and so forth, to offer their opinion. I know some people think auditors come in and they find everything in there, turning over every rock, and depending on certain situations, they may not see everything, but everything they sample, they do see. So they always put that in there in every audit just to say, just in case. On the second page, again, it's just talking about what the responsibilities are, what the supplementary information is for. And it's just to provide additional analysis for us to look at. And then you get into other information. And so this is basically taking the table of contents a little and saying what each section is about it. And then the reporting requirements. So the date of the report is January 14th, because it's due January 15th, and they completed the audit on the 14th. They just had to finalize the report. So when we get to the meat of the report, and when you look at the first page, and I'm not sure how much detail you want me to go into when you're looking at these numbers, but in 501c3, they call this a statement of financial position. In a for-profit, they would call it a balance sheet. So you may know it as a balance sheet. And you start with obviously your assets, which is everything you own that is liquid or non-current assets, and your liabilities. So when we go through this assets and liabilities, the one things I do like to point out is when we talk about our assets with our lease, and you can see on your asset side, you have 77.8 million, and then on your liabilities, so they kind of wash out. And basically, this is the fair market value of the lease that we have to pay through 2049. And you have to put it on your books as an asset because we're in the property, and a liability that we owe. And so they kind of wash out. But because of accounting rules and standards, you have to see it. And I know sometimes people look at that and they're like, well, what is this? That's a lot of money for an asset. And then as we go down the page, you look at your total liabilities and net assets, and it's 117 million. But really what you're looking at is your net assets without donor restrictions is $24 million on your balance sheet. Any questions on the balance sheet? Good, okay. So the next statement is the statement of activities. This is also called an income statement, a profit and loss statement. It's all the money that comes into the charter school, into the academy, and all the money that goes out. And any thing below the line, we call it below the line when we get to net assets. So you'll see all the revenue that's come in, and you'll see all the expenses. When we get down to net assets, you'll see this line item that says prior period restatement of $8.8 million. And so this will be in part of the findings, but I want to go over it in really detail so you understand what it is. And it was not an error that happened because of anything that the Palmdale Aerospace Academy did. The prior auditors, when I Bailey came in, they understood the accounting treatment of restricted revenue, which comes from categoricals such as ELOP, educator effectiveness, arts and music. So the way they interpreted the accounting standard was when the state gives you the money, so say the state gives you $5 million, and in 22-23, you only spent $2 million, that $3 million you leave as your ending balance to continue to spend it. But the way our new auditors interpret it, and they have done this, they said with all of their charter schools, and the way they understand it is you account for these type of categorical programs the same way at a school district would as a deferred revenue type account. So what they're saying is in 22-23, all the money that we received for these various categoricals and all the money we spent was this extra $8.8 million. So what they want to see is if in 22-23 you spent $500,000, your revenue should be $500,000, that equals zero. But then you're going to say, well, I still have the cash, right? Because the cash is in my bank account. That goes on your balance sheet under deferred revenue. So you'll see a line item on the page we just looked at called deferred revenue of 9.9 million, which is higher than last year. So that's where that money is. So they're not saying we're taking the money, you don't have the cash. It's just an accounting treatment and a way to present it. So after we had, so that's why they're recommending this as an audit adjustment, and it is part of the findings, but it's nothing that anybody did from Palmdale Aerospace Academy. So we will be making that correction. So then the next page is just a different way to look at expenses that they have to present program services and management in general. And again, program services is everything that directly supports the students. On the next page, page 6, is the cash flow statement. And I always tell people, if you really want to see how a business is doing, look at their cash flow statement, because the way accounting is treated, you use what's called accrual accounting, which in gruesome detail really means that, an example, this expense is from 23-24, but we paid it in July 24, so we have to move it on our books to last year, but we didn't spend the cash till next year. So what they do is they take this cash flow and they make an adjustment to say on June 30th, what is your true cash balance? So we add things in, take them out. They were not real cash entries, but just book entries. So based on this, they're saying we have this healthy cash balance at June 30th of $26.6 million. So then the next part are the notes of the financial statement. The notes of the financial statement are the meat of the audit. So all these summary numbers that you've seen, these notes basically back up and support where those numbers came from. So if you ever see a number and you're like, well, what that number came from. So the things that I would like to highlight on this page is number B, separate consolidated financial report. So historically in the past, the prior auditors, they would do one audited financial statement that would include the charter school and then the foundation, the Palmdale Aerospace Academy Foundation, and then Design, Create, and Explore, which is the LLC that holds our bond lease, and it was issued under them. So they were consolidated. But due to time constraints and everything that has been happening with a change in personnel, this audit that we're looking at now is only the charter school. And this is the only one that is legally required by the state by the January 15th deadline. Once this is approved, then they will go back and in here it says no later than May 25th, they'll have the other two, the consolidated audit together. But that does not impact what we do, does not take us out of compliance. This is the main document that we need. And then again, what I was talking about, basis of accounting, accrual accounting, you recognize the revenue when it's earned, not when you receive it. And we already went over that. And under financial state presentations, if you historically are used to looking at maybe district and not 501c3 nonprofit statements, they use fund accounting, and you'll see that in their financial statements. In this environment, there is not fund accounting. When we get to the next page, again, it's really just telling you how they use estimates, what they consider contributions. Number F, in lieu of property tax revenue, that is the property tax proceeds that does come from our authorizing agency, and that is Palmdale School District. And they are to send us the revenues monthly and we recognize them as earned. So that I just like to point out because that is money that does come from Palmdale School District. And then they just talk about the functional expenses. And this is a little number H, cash and investments. This is just a little description of the type of investments that we hold when our money is swept every night. So we do earn interest. Page 9, I'm not going to go into any really detail on it unless somebody has a question. It just talks about, again, how they do receivables, what for our capital assets, our policy accounts anything greater than $5,000 to be put on the balance sheet as a capital asset and not on the expenses on the income statement. And then how they do fair market value adjustment. Page 10, we get into more of the notes, and N, I just wanted to bring to everybody's attention because that's kind of a new accounting treatment that has come up recently. And so things like, which you'll see later on, things like our phone system and our copiers have to be accounted for differently on our books than historical. So we're making those adjustments. Again, note 2 is our cash and cash equivalents. We already saw the $2.6 million and you saw how we arrived at that. The next thing is accounts receivable. And again, accounts receivable is all the money that is owed to us that we have not received yet. Note 4 is our capital assets if you wanted to see it in more detail. Like I said, this is really to back up the summary numbers you saw before. Undeferred revenue, note 5. So this is where I was talking about the 8.8 million from the prior year. So we have to make the adjustment for 22-23 and 23-24. So we'll see this in the notes and I'll reference it more, but this gives you a breakdown of all these different categorical programs that had ending balances. And again, they're sitting on the balance sheet as deferred revenue. Note 6 is just more detail about all the different leases. And like I had mentioned in paragraph 2, the copiers and the phone lease. And in paragraph 1 and the table below, you'll see that $78 million that was referenced on the balance sheet for this is our fair market value of what our lease is outstanding. When we get to page 12, we have our beginning net asset prior period restatement, and that's that 8.8 we talked about earlier. And again, as we get down to ending net assets, we saw that 24 million. So this tells you how you got there. And again, liquidity. So it's pretty much all the numbers, just detailed. And anytime you want to stop me, you have a question, more information, just let me know. Page 13, again, it just talks about our STRS, our funding policy, and additional entries that are on our books or the cost that it costs the district for. If you look at funding policy, which is our retirement plan with CalSTRS, it's going to highlight what the district spent last year for CalSTRS because we pay 19.10% for every dollar for teachers who are in the CalSTRS program to the state, and they also have to contribute an amount. The next note 10, commitments and contingencies. This is where they kind of put like the risks of whatever organization they're auditing. And you can see the first one, as we all are aware, school charter authorization. And they put this in for the shareholder, what are the risks, for the company. And then it goes into the government funds. Page 14 is just, again, more of the commitments and contingencies that you have CalSTRS. As far as we are aware, we have no pending or threatening litigation and so on and so forth. Note 13, just so you're aware, what they do is subsequent events. So after June 30th, until they start the audit, they do pull everything that we posted after June 30th to make sure we recorded everything in the correct year. Everything is where it should be. And I am actually very happy to tell you that we had no adjusting entries. We had nothing that was, improperly posted in the wrong year, prepaid or whatever. So that's great that we have no audit adjustments there. The supplementary information, which I said is the additional information for analytics. They always show our ADA because that is what we get paid off for our LCFF revenue. So they want to make sure they highlight what our second period report, also known as P2, also known as principal apportionment 2, that we're paid on, and then with the annual report. And as you know, for LCFF revenue, we are funded on P2, but there are other types of funding and special education that are tied to the annual numbers. The next page are our minutes, our actual instructional minutes in class. And that's also very important because if you are not in compliance with your minutes, you could have a lot of penalties and have to pay the state back lots of money. And you can see based on our minutes here that we do exceed all the required minutes by the state. And then this page 17 is the page that shows us all the adjustments that once this audit is approved and finalized, then I will go into our books and I will make all these adjustments, which are much more detailed in a variety of different accounts than just this summary. So these are all the adjustments that have to be made that I will go in and make that they found. There's the 8.8 from the prior year. And there was another adjustment of 976,000 that was not done in 22-23. And the rest of these are adjustments. The revenue recognition, the 1.1 million is what I referenced earlier about the categoricals. So it's the 8.8 from 22-23 and 1.1 from 23-24 to get to the $9 million. And then we did have some, so when you, when you purchase something over $5,000, it goes on the balance sheet, not the income statement. And some of the roof renovation was categorized incorrectly, so we're removing that. And the last one is, I spoke of the leases previously, that this is a new, accounting feature that we have to do. So we did not do it at closing, because as you're aware, we only had a short time to close. So this is an adjustment for that. And all of these are corrections that going forward will not occur, because it's, we know the rules, we have access, we have time, so none of this will happen again. So we get to other information. On here, when you look at the, page 18, the board of directors, again, this is the board of directors that, were during the 23-24 school year. So it's the prior personnel, not current board or current personnel. Now, the independent auditor's report, again, is the part that, you'll find the findings on. And when we get in here, I just want to reiterate again, and I'll probably say it again, is that when we get to the findings and the challenges, they're all things that are correctable, that we would not have these findings again. So I'm very positive about that. So this first page, on page 19, is the independent auditor's report. And this is what, really the purpose of this letter, this report they do, is the scope of testing of internal control and compliance is really what it is. But I'd like to draw your attention, under report on internal control over financial reporting, you have the word internal control, and you hear that a lot, and I'm sure you're aware internal control is how are all of your systems managed, your budget managed, your documentation managed. Are there things that can be done better? And of course, the answer right now is yes, and we will do that. So what they do is they look at what our internal control structure is, and that's how they design our audit procedures, which I'm going to go into further when I get to the findings for one of our findings, because we only have two. In the paragraph 2, they talk about different types of deficiencies. And because in our findings, we do have a material weakness deficiency, I just wanted to bring it to your attention that this is where they provide you with the definition of material weakness. And again, it's an issue that is very easily solvable and not have to be, and won't be repeated, have to be repeated. And then, it's just informational. Page 20 is just, again, the purpose of the report and the findings. And then they do a second letter for independent auditors report, and this is on compliance. And so, in the second paragraph, it says, we have complied in all material aspects with the laws and regulations of the state program. So we did what we were supposed to do, when it comes to compliance on state program. And again, they have not audited our federal programs. They will do that when they do the additional audit. So page 22, again, it's just reading just in detail of what the responsibilities are for compliance. When we do get to page 23, I always like to point this out. I think it's interesting, in the first paragraph, when it talks about other matters. So there's a K through 12 audit guide, just if you didn't know this, that comes out every year from the state. And when you add all these new funding sources and everything, every year the state audit teams meet and they come up with new guidelines for the auditors. And that's how they determine what they're going to audit for your, for the different, schools. So, any questions? Are you ready for the findings? All right. So when we start on page 24, this is just a summary of what we're going to look at. And if you look at the top where it says material weaknesses identified, you'll see a yes. And what we want that to be is a no. And non-compliance material is a yes, instead of a no. And then, but like I said, everything is correctable. We have, great management. We are going to implement, internal control procedures. It'll be great. And then I always like the 5-digit codes. That is just telling you what numbers, if you're interested in numbers. Okay, so page 25, our first finding for this year. And again, it's material weakness. And if you look at the second point that says condition, this is where they kind of lay out what the problem was. The first one was a delay in audit fieldwork to occur. And because of change of personnel, because of, as you are aware of everything, I don't have to talk about that. And then because we had the holiday, we were limited in the amount of time we had to present them with all the requested items. And I will say that everybody stepped up 100-fold and got them everything that was required. Also, you'll notice that it says that beginning net assets did not reconcile the previous year's audit, and that is because of that 8.8 million. Prior adjustments were not properly posted. That's at 976,000. And then talking about this year, the audit adjustments were needed to report the leases, which we talked about, and lease liability. And we had a fixed asset and revenue recognition. So everything written in here, I showed you numerically where the adjustments were. And so again, they write the cause, they tell you the effect, the 9.9 million, which we actually looked at in detail. And so you can see the corrective plan of action is what we from the management sent to the auditors of how we will correct this material weakness. So are there any questions on this finding? Okay, so the second finding on page 26 is a little bit more complicated. So I'm going to go into a little bit more detail. And the first thing I want to say is under questions cost, where you see $1.1 million, please do not be alarmed or panic. Because once I finish this part of the presentation, you'll understand that this will not be the final outcome of this audit finding. So what this audit finding is telling you is what they do, and we talked about internal controls and how they do sampling and everything. They audit our free and reduced meals. And that's what this one is really pertaining to. All our students who qualify for free and reduced meals is in our CalPAD system, which is our student database system that captures all student data, everything you could imagine and not even imagine and more. So what they do is we send them a list and we tell them how many students that we have listed for free and reduced lunch. They look at that list and they pull up everybody who is what's called a direct certification. So if you qualify for free and reduced lunch and say you're on Medi-Cal at the state level, the state populates our CalPADs. It's a direct certification, so we don't have to prove that they qualified for it. And this is for our UPP. So when we report our UPP number, unduplicated count number, to the state, that is the money we receive in part of our local control funding formula. So this number is very important, so that's why we audit it. So when they take out all the direct certifications, they have a list of students, about 552 students. And then they say, based on what they see in our internal control structure, they chose 60 students. Of those 60 students, we have to provide documentation of the household income statement that we provide them. Due to several things, we were only able to find 14 of them. We have them in our folders. The problem is we switched from one attendance software, not attendance software, it's called, to Power School in the middle of last year. We had a person who was on vacation and out of the office who knows how to pull a lot of the stuff. We found Power School was not as easy to pull the data. Of the 522, we went in and we found 314, oh, I think 300, I have changed that one, 328 of those forms. But of the 60 they chose, we only found 14. So because we had a deadline on the audit and we have to present it, we were not able to pull everything. So in working with Gina and the auditors, what we are going to do is we're going to engage the auditors, hire basically, like an engagement. And they're going to come in and they're going to audit 100%. So they're gonna look at our 520 students. And we are going to provide them all the data we have. And we will have time to provide them the data, all the personnel will be back, IT has found the documents, there's emails, we have the data, we just didn't have it in one place to pull it again, because we had change of systems. And that's when you talk about an internal control weakness, that's something going forward. So I've been working with Chris, with IT, with everybody, and everybody's on board. We're setting policies, we're changing procedures, we're making sure this will never happen again. So that 1.1 million has to be in the audit, because as of today, that's all the documentation they have, and we're out of time. But we will engage them, they will go through it again, and then what they will do is after they verify everything, and it's obviously going to be closer to the 520, hopefully we'll have all of them. Sometimes you're off a little, but we'll have all of them. Then what they do is they submitted a letter to the state that they will accept as verification of a revised error number to use when an audit is amended figures for our UPP. Because basically what this is saying, if we can't prove it, we misreport it to the state, our UPP is off, we owe the state 1.1 plus probably penalties and just whatever. But so please don't be alarmed. We understand the issue. We're fixing the issue. We have the data. We have to pull it all. And as soon as it is amended and we have the new numbers, we will provide it to the board as soon as possible. So any questions on that finding?
What do you think that number will look to?
Well, looking at this right now, if you took, what did I say? It's 46, 14 out of 60. So they're saying we're at only 23%. And if of the 520, say we found 500 divided by 520, you're at 96%. So it's a minimal number
Okay.
that I don't, so.
Does that mean that whatever, does that have to be reimbursed? Is that what this means, or it's just?
At this point, nothing has to be done until we amend.
And part of what you shared about someone being out and can't access the information, part of the new policy is going to have maybe more staff trained on how to
Yes,
access that information?
yes, and because we'll have one database in Power School, and Power School also had a breach, so we don't know if that was causing issues with finding the data. The other thing with Power School is now when a parent registers, they go in and they physically put the information in. And then that populates Power School. And so when they physically put that information in, it's not a paper form that they fill out anymore. So how are we to access that out of Power School so we can show the auditors that the parents filled this out? So we're working with Power School to figure that out. Do we send them screenshots? So the data is there. It's just we ran out of time to pull the data.
Can I say something?
Yes.
I want to thank Roseanne, Karen, Chris, Michael Duarte, all here late last night, going through fiscal Q files. Michael went through everything in Power School. The problem is the auditor told us yesterday and our deadline was the 15th. So when we started finding the data, David said today, he said, we can't look at anymore. We don't have time. We've got to get you this report. So that's kind of how it boiled down. But even at 320, let's say we only had 322, what percent is that? Like 60? 328. What percentage is that of 522? It's better than what we have now, right?
Yeah.
I mean, a lot better.
Something.
Yeah.
Yeah, so that's why we chose to go that route. And then there's also another route of appealing and.
Right, but we don't want
but
to
we
go
don't-
that way because we don't want to pay them, appeal, have to get the money back. That's not a.
Yeah, but
right way to do it.
our assistant director of IT was really instrumental in finding a bunch of them, and he found even more today. It's just too late.
And sometimes it appears maybe a parent emailed in the information as opposed to filling out the form or having the document. So they're not concerned with the types of documentation as long as we have the documentation.
I didn't see it. It's over there, and I'm talking about it.
He sent the email at 1:23 a.m.
Yeah.
So are there any more questions before I move on? Okay, so as we get to page 27, basically what they have to do in an audit is go over what the prior year's audit findings were. And that's basically what these are. These are the prior year audit findings, and then in the current status, they'll tell you is it implemented or not implemented, or what happened. So I was not gonna highlight them because they don't really affect us this year. We want to focus on what the audit is saying this year and what our internal, our findings are for this year. Questions? So that's all I have. I can go in more detail. Anything else?
So what do you think of the audit?
I think the audit is good because it's only 2 findings. I think the findings are troublesome, yes, but they're not findings that are not easily fixable.
What kind of comments or questions you expect from Palmdale? So we're prepared.
I would expect that they would probably ask, based on these findings, how are you going to resolve the issues? How are you going to fix the material weaknesses going forward?
I think you'll be able to do that.
Yeah, I think if you have one person, or, people, you have the same people over time who understand accounting, closing the books, and because we're not always rushed behind changing people, you have more time to really look at everything and get everything correct.
They should understand that because they know we haven't had a CBO and
Mhm.
permanent CBO in a long time, so.
And I know this year we've been in our partnership meetings talking about how we can even increase our numbers, of students in need. And part of the structure that we've been using this year is following up with all parents to make sure we have those forms and
What percentage are we at?
70.
Seventy-seven, I think it was 77 is the last one we,
Yes, 77.
the amended percentage, yeah.
Yes.
So it's a little lower than what Palmdale says, so we should.
It
Should be able-
it
should be
is
able to
it
increase
is
that.
slightly lower.
Yeah, so we've been doing a lot of outreach this year. So this year it'll be different, but for last year, it is what it is.
Very good.
And so if we're going into even next year, if they ask about next year, the intention is that when you do your actual registration paperwork to come back like you have to do every year, it will be a form that has to be completed. You can't go on if you don't complete that housing questionnaire, income questionnaire. Any new students coming in, it's already part of their registration packet.
Do you think they might ask you what some of the internal controls that need to be fixed are gonna be and what you're gonna do for them?
Probably,
So you'll be ready for that?
yes.
Okay.
And we used to have a position here that handled the SIS and data and such, and we need to look at having that come back because we have one person doing it all.
Yeah.
So we're talking IT, and
It's a lot of money, so yeah. you
Yeah.
have to have somebody
Right.
looking at it.
it's worth it for
Yeah.
everybody, yeah.
Yes.
I did see, a comment on here about ADA and reporting ADA and stuff like that. And like over reporting
Is that
On the
from
last
the
page.
prior year?
Yeah.
What page is that?
The last
on
one,
the last page.
29.
29? Yeah, so that was from the 22-23 audit. And if you look on the current status, it says implemented. So that means in 22-23 it was brought to management's attention, and in the audit for fiscal year 23-24 it was implemented, and there were no ADA findings this year. Everything matched.
Perfect, thank you. Yeah, that's a big number.
Yes,
That's a huge.
yes,
And it's ready to give to Palmdale tomorrow?
yes. Yeah,
They're gonna take
soon,
draft off.
What?
They're gonna take draft off.
yeah, so once the board approves it, then I will email the auditors and they'll make it a final. And as soon as they send it to me, I'll send it to Palmdale. If I get it tonight, I'll send it tonight.
Great, thank you.
You're welcome.
Do you have any more, questions or discussions for?
I just want to thank you.
Yes.
That was a
Great
very,
job.
very thorough report and provided clarity.
Yes.
So thank you for all the work.
Thank you
that
and your
was
staff.
done.
I know you guys have been working very,
Yes.
the whole staff.
I really want to, yes, definitely think Tanya, the business office staff, they have jumped through hoops, stayed late, pulled everything. I think we filtered out to every department, pulling stuff, asking for stuff, because we did it in like a week to pull everything, which usually. I do have a question. Yes.
Is there any specific training that you feel like your staff in that office needs, to make sure that this is going forward with minimal issues?
Yes, and that's one of the wonderful reasons to have Karen here with us is because she is working with the staff. And we actually have a meeting scheduled for tomorrow to start implementing policies, procedures, calendars, timing, responsibilities. And so while she's with us, that is what we're gonna be working on together. And she's gonna be working with them to really understand the importance, the timetables, and really building it out.
I think the business office is a really good department. I think they've really tried and I think they've worked really hard to make sure everything has been cleaned up from the previous people that were doing the work. So I want to make sure you understand that. But I always know that there's some ways that we can help them to do even better. So thank you for that.
Yes, and it seems like you are right. They're in those positions and they have not had a lot of training. And maybe only one person did all of the job taskings historically, and they haven't had the training. So Karen and I really, that's the priority, to get the training. I also have them doing additional CASBO business office training. Two of the staff are going tomorrow down to, Downey to Laco to do CalSTRS and CalPERS training with Laco. So we're really pushing, and I'm a big believer in professional development. We never stop because things are always changing, especially in this environment.
Thank you very much.
You're welcome.
Yeah, they definitely have come a long way. I know before you got here, Karen and
Yes.
Tanya and the girls there have been working extremely hard and stuff, but now.
And I do want to give special accommodation to Karen because she did close the year. And she had 2 weeks to close the year. And these are her numbers that she put together and they audited her numbers. And so we couldn't have done it without Karen. And these are the numbers they started with.
I'm glad she's gonna be here with us longer, right, Karen?
Yes, we all are.
I want to say that you have a great team. Okay, the business staff has been great and everyone is doing new things. Even Marlon, who's been here the longest, has whole new responsibility that she's doing. So the fact that they haven't had training, is really critical. So we're working with that. But your, admin team as well has been incredible to work with and have just bent over backwards to help me in getting things done. So you have a really great team. I'm enjoying my time.
All right, do I have a motion?
Make a motion to approve the annual audit report.
Do I have a second? All right, all those in favor say aye. Aye. All those opposed say no. Motion is passed. For the annual audit report for 2023-2024. That's it.
Make a motion to adjourn.
Yep, all in favor? Aye.
Aye.
Meeting adjourned.